What's going on, everybody? Jeff here. Welcome back to the channel. Our 4-day relief bounce rally has come to a bit of an end for at least the short time, seeing a major pullback again inside the indices. The SPY, I had thought it was going to bounce anywhere between the 459 and 464 level. We fell just shy of that. Facebook earnings really leading to a massive pullback. In this video, I want to talk about a few things. What is next up to happen? Couple things I really want to go over in this video. One, you've heard me mention this before if you've been following my channel for quite some time. The only way to indicate what is going to happen on the right is by looking to the left. We also have to go over a little bit of Fed policy and then natural market cycles and changes. I'm going to break everything down for you in this video. Before I get started, there's a couple things I do want to mention, and that is first to establish what kind of trader and investor you are. I feel like lately, because the market isn't just nonstop going straight upwards, especially in the short term over the weekly time frames, a lot of people are starting to transition from a long-term investor into a bit of a swing trader or day trader, which I always think it is great to be able to expand your knowledge. However, you don't want to be able to do something that you don't fully understand, especially because there is financial risks to it. So in this video, I'm going to break everything down for you, whether you are a short-term trader or a long-term trader. Let's get right into it. First off, we are going to take a look at the daily charts. If we zoom in a little bit here, you can see we rejected off the 50-day moving average. A nice decline all the way down from about that 458 level, now currently sitting at 446, and we still do have Amazon earnings to come out in just a few minutes. That might accelerate the sell-off if they do not please investors and really satisfy them, especially the type of market that we are in. But I'm getting the other big question. So I had said early last week, that expect to see some bit of a relief bounce. So I want to get ahead of, and really give you some information on exactly what I'm seeing. So I'm going to zoom out just a little bit here for you guys and show you over a 3-year time frame. A couple things are happening. I'm going to cut out the COVID and just start from pretty much the last 2 years. Okay, so what you are kind of seeing happening right here, we haven't seen since COVID, where we have touched down and officially broken through the 200-day moving average. We bounced all the way back up to test the 50-day moving average, where old support became new resistance, and we bounced off that again. But two things I do want to mention. First off, if you are a short-term or a swing trader, the amount of volatility you have inside the market is going to give you an amazing opportunity when you're waking up every single day and the market might be gapping up 50 to 100 points. And throughout the day, it's just the charts are very, very stable. There's not much action happening. When you're looking to play those intraday moves, that's not the market for you. And this is surely the market for you. You just want to know your levels going into it. So make sure you take your time to understand charting levels. Don't always look at the shorter time frame. Also look at the larger time frame. Now, if you are a swing trader or a long-term investor, couple things I do want to mention. First off, I still not yet do I see a market crash happening. Now, we do have things that are going to be completely revolving all around Fed policy. And if they are not able to react, at least in a halfway decent manner, to help curb some of that inflation without rising rates too quickly, we might see a bigger pullback. But inevitably, the market is still in a state of being strong. It has not yet broken below those levels, and it hasn't even touched into bear market territory. So until that happens, you have to maintain on the side of where the channel is moving. But if you think about this and you look at the pattern we are starting to form right now, we have came down and started to pop back up, and it looks like we're going to come down again. You're going to want to look for those 420 to 425 levels to hold, just like it did. All right, if we break below that level on a longer time frame, you can start to see momentum to shift. Okay, and what I mean by momentum to shift is that where you are no longer seeing these higher highs and higher lows. It was something I mentioned in previous videos, especially before the start of 2022, where every single time we would dip back down, the low was higher, and every single time we would come back up, the high was higher. That's a very, very bullish momentum, and it's easy to see the channel moving in one direction. However, we have now officially made a lower low, and we are starting to kind of make a little bit of a lower highs. That could indicate a shift in momentum. So if we do fall below those 420 levels and get some solid closes, that may indicate a shift of momentum. But in the short term, all right, what you are seeing here is something that we have seen in the past. This happened all the way back in September of 2020, where you got to see this W formation. We come down, we dip pretty hard, bounce back up. We need a little bit more of a retest, dip back down to get some more buying pressure, and then we continue on our merry way. It happened again also in February of 2021, and then again throughout the time frame. It even just happened recently in November, where we saw another massive dip coming through, kind of, broke up, stabilized just a little bit, formed that W, and continued to make higher highs. Now, I don't think, especially because monetary policy is changing, that we are going to make all-time highs. I do not see that happening. Okay, I do see us kind of channeling and the volatility to continue. That's why I'm saying, if you are a day trader or a swing trader, this volatility is going to really, really give you the opportunity to reap in massive rewards if you're able to understand how charts work and key levels. Okay, but if you are a long-term investor, and I really want to harp on that, I always recommend a dollar cost average into your positions. And if you look back and think to yourself that you could have bought blue chip companies, good, solid, quality companies. I'm not talking about your speculative stocks that are trading at, 100 times, earnings, all right, and they're down 70% from last year. I'm talking about your steady blue chips, Microsoft, your Home Depot, your Costco, Apple, those quality stocks and companies. Wait for the dips to happen. Apple just dipped down to 160. All right. And it gave you an opportunity to really capitalize on some of those dips and to continue to remain patient. And there's one last thing I do want to mention when it comes to remaining patient. All right. Is that you don't want to be all in on the market. You always want to be able to be patient and take your time to look for a good entry. Okay. But you also don't want to be fully out of the market long term. And I'm talking, 5, 10, 20 years. All right. The market does trend up. And you don't want to be on the sidelines, because sure enough, you will lose. If you are in a position where you're already retired or you're going to be retired very shortly, that might be a little bit different of a story. My father has been retired for 10 years. And I did say to him, Dad, it's a little bit different of a story for you than it is for me at 32 years old, where I have a lot of time on my side and I continue to generate income. But just keep that in mind going forward. Be patient on your entries. If you're thinking that you want to be able to get Apple at a price point of when it was in the 120s, in the 140s, all right, just like it dipped all the way up here from 136 back down to 104, and you missed that opportunity. The same thing happened when it hit a high of 180. It came all the way down to 155. Now we're sitting at 172. It doesn't mean go chasing it right now. Just be prepared and have the capital on the side to, if it does spike back down to that 156 level. You can see we did have right here, I talk about this all the time, it became old resistance, became new support here in November, as well as just recently. Okay, this is a perfect chart pattern right here. As you can see, this red line I just drew. So just be patient and aware of the prices that you want to be able to buy some of these good quality stocks at. Always have room to be able to add to these stocks and continue to grow your portfolio for the long term if you are a long-term trader. If you're a short-term, continue to learn, because this volatility is going to continue. And like I said, it's going to give you some amazing opportunities. So that's it for this video, guys. I'll see you in the next one.